Hey, what's up guys, welcome back to another video on Trading Camp. And for this video we are going to do another scalping strategy video, but instead of testing other people's strategy, I'm going to come out with my own strategy today and show you guys this strategy that I've been testing out for the past few days. So yeah, let's dive straight into this video. So for this video we'll be using two indicators. The first up will be normalized smooth MACD indicator. So just search up normalized smooth MACD by Dread Blitz. For this, you're going to change certain things. You're going to change the smoothing period to 30 and the normalization to 30. For other style, we're going to remove the signal and the zero line because that's not needed. And as you guys can see, we have this smoothed out MACD indicator. So as opposite to what the normal MACD indicator is, you can see this is the normal MACD indicator and it's quite confusing. But whereas if you look at the normalized smooth MACD indicator, you can clearly tell when to go long or when to go short, and it's basically an upgrade of the current MACD indicator. Next up, we cannot just use this indicator alone. We'll be using this other indicator called the cumulative delta volume indicator. So for this will be the two indicators that we'll be using. It's relatively simple as well. So the green candles means that there's a lot of buyers in the market and you want to buy. The red candles means that there's sellers in the market and you want to sell. So strategy is pretty simple, and yeah, let's dive straight into the rules for this strategy. So first off, for you to go long, you must wait for the normalized smooth MACD indicator to turn from red to green, and there must be a confirmation on the cumulative delta volume indicator, meaning that the candle must be green in color. So what do I mean by that? So let's look right here. We have to change from red to green, and we look on the indicator. The candle is green in color, so you want to enter a position right there. Stop loss put on the recent swing low and a 1.5:1. So going to wait again. We're going to wait for a change of the red to green indicator. And we have to check this cumulative delta volume is green in color, so that is a valid position. Stop loss right below and a 1.5:1. So let's look for more trades. We have to change from red to green, simple, and then we will take a long position there. Stop loss right below, 1.5:1. Right here we will probably have our first loss, red to green, and take that position. Stop loss right below, 1.5:1. Yeah, that will be our first loss out of 4 trades. So now I'm going to bring you guys through how to take short positions. It is basically the same thing, but you just want to flip it opposite, meaning that we are waiting for the normalized smooth MACD to change from green to red, and the cumulative delta volume to be red in color. So let's look for trades now. So let's look right here. We have to switch from green to red here. But if we look on this change, you can see that the cumulative delta volume is green in color, so that means that it's not a valid position. Here we'll change from green to red, and on the cumulative delta volume is red in color, so valid position there. Stop loss put above the recent swing high and a 1.5:1. So that would be a win right there. Let's look for another position. Here we have it green to red, and on the red part here you can see that it is red in color as well, so that's a valid position. Put your stop loss above the recent swing high, or you can put it up slightly higher, up to you, and a 1.5:1. Same thing here, you have to change from green to red and red on the cumulative delta volume. Enter right there, stop loss right above, 1.5:1. And what you can see from this is that we have actually taken so many trades, 1, 2, 3, 4, 5, 6, 7, and out of 7 trades we have managed to have 6 wins and only 1 loss, which is pretty impressive for me. And what you realize is that we actually managed to catch the top of a lot of the trend. So you can see we pushed up to this top and start bottoming out, push up and bottom. The same thing, we managed to catch the dips. Right here you have this big dip, and we are managed to buy that and move back to the upside. So you can see here, although it changed to green, this is red in color on this change right here, so it's not a valid position. So you know that this strategy helps to avoid all these fake signals, and it's pretty good strategy. But obviously there is areas that you guys should avoid, like trying to trade the choppy markets. Like right here, you can see that in this area it's been bouncing up, down, meaning that there's not really a clear direction. Whereas for markets like this, what you see is that we have the break to the upside. You can see if we replay this on backtest mode, let's see how this plays out on the normalized smooth indicator together with the cumulative delta volume indicator. So we can see that it turns red in color, so we are waiting for a switch to the green side. So here we have this break and this confirmation right here on this candle, so we're going to enter right here. Stop loss right below the recent swing low on 1.5:1. So that will be a winning position. Here we will enter a short, but in this case, because you sort of clearly know that it's in the uptrend direction, I'll clearly not take this trade because it's quite risky, but I'm just going to take it for the sake of the video. And yeah, you can see it's clearly going to be lost because you're going in the opposite way of the trend, which is not a good thing. Okay, here we have solved this entry. So it ended up to be a loss. But here we have another entry right here. So what we see here is that how we're going to avoid these trades is that, personally, when you see it turns to red in color, you're just going to exit the trade, so this trade will break even. But instead, when it turns to red, you're just going to reverse your position and you're going to change it to going short right here. So in this trade right here, same thing, you want to enter long, and the moment it reaches this point where it turns red in color, you're going to exit your position when it turns red. So that is going to be your exit signal, either when it reaches your take profit, or when it turns red in color when you're in a long position, or when you're in a short position it turns green. So what do I mean by that? You can see that here is red. You can just scalp it until the point it turns green, which is right here. So you're going to exit on this portion right here, and it will end up to be a win instead of a loss. So let me give you guys more examples on how to take this. So we're going to wait for a change in the red. So we're going to enter a short on this candle right here. Stop loss right above. So okay, in this case here you can see it turns green in color, so we'll exit on this candle and our loss will be reduced to that candle itself. So same thing here, we want to take another shot. So loss right above. And there will be another win. So if we count here, 1, 2, 3, 4, 5, 6. The wins are, there'll be more wins than losses, but sometimes your wins will be smaller depending on how you exit. So you can either exit at a fixed 1.5:1 risk to reward ratio, or you can exit when it turns from green to red or red to green. So if you're in a long position, that means you're waiting for it. You're in this green position right here. When it turns red, then you exit. This will mean that you can probably scalp out more. Let's see, it's red here. You'll be able to scalp out more right there. Or in a short position, let's say right here, when it turns green, you're going to exit on this candle right here instead of 1.5:1. So personally, I like when the MACD changes, that is the better exit strategy rather than the fixed 1.5:1, because more oftentimes than not, you'll be able to have this sort of this big moves to the downside. Let's say right here it turns from green to red, you enter a short position right there, stop loss right there, and you have a 1.5:1. So let's say you have only a 1.5:1 risk to reward ratio, you'll be only getting this much. But if you exit where the thing turns from red to green instead, you're going to exit at this point right here on this candle, and what you realize is that we have almost a 3:1 risk to reward ratio instead, which is why I like the exit strategy of this small. But anyways, that's it for this video. Hopefully you guys enjoyed. Make sure to hit a like and subscribe button and to check out my other videos as well. So thank you guys for watching and goodbye guys.